We're joined by David Abella. He's the portfolio manager and senior equity analyst at Rochdale Investment Management. Abella helps oversee Rochdale's $4 billion of assets under management, many of them retail stocks. Hitha, Prabhakar, of course, who's been our retail guru here on the show, joining us as well. And David, great to see you again. And is this trend going to prove true again this year?
Well, I think it's a matter of if expectations are better than what people thought for the holiday season. So in a lot of years where not so sure what the holiday season will do, and then suddenly there's some hope that it'll be a good holiday season, retail investors will get in early. Okay. So in a sense, if the holiday season is going to be good, you need to be in by Thanksgiving to really get it, because retail investors are a little fast that way.
So what are you going to look for as an investor before Thanksgiving to see whether or not this is going to be a good season?
Well, I think what's going on is retail numbers have been pretty good so far, and this month's same-store sales, which was last week, was a little below expectations, but much better given all the bad headlines out there. And I think that, consumer is hanging in there. It's one kind of building block of the economy right now that hasn't lost its nerve.
David, well, speaking of same-store sales, a lot of these teen retailers have been reporting, not so great sales. We just were talking about Urban Outfitters reported their Q3 earnings last night. They missed expectations there. Abercrombie & Fitch missed the mark last week. What do you think about teen retailers and that investment opportunity? They are hysterically volatile, but is this maybe an opportunity to invest?
Well, they're very volatile. I try to avoid volatility in the portfolios I manage, but I would say that teen retailers, teen unemployment is very high. It's one of the black marks out there. You have 9% unemployment, but with teens it's really high. It's a tough sector. Abercrombie & Fitch was priced for perfection. It missed its earnings, down 20% in one day.
Right.
So I think it's a little hot to handle right now for a more conservative investor, but if the economy starts to turn, they are good values.
Well, David, one of the things that Abercrombie & Fitch cited in their earnings call, or their forecast call, was that Europe was a concern for them. They saw comparable store sales in Europe decline. How much is Europe going to affect the retail space here in the U.S., and are there stocks that people should be buying if they want to be insulated in retail from those European concerns?
That's a good question. Generally speaking, Europe wouldn't be a concern with U.S. investors. If you're in a name like Walmart or so, it's going to be pretty much, they have international operations, but the core is U.S. Or Nordstrom, a name I like, that's pretty much just a U.S. story. So in a lot of cases, U.S. investors in retail are very insulated from the rest of the world markets, but it does affect the trading.
Where you see consumer spending going, I mean, why is it that, or is it still true that luxury retailers are still going to do well here? The discounters will also do well, but it's the middle market retailers that are still going to suffer, like the department stores. I mean, is this still true?
That is still true, and what happened last month is the luxury retailers did a little better than you expected, given the markets being so beaten up. That's a real leading indicator of how luxury will do, is what the U.S. stock markets are doing. Given the stabilization we had in October, that's another reason for some strength, hope for the holiday season. But the middle is still tough. You have a name like Kohl's. It's been a bad stock. It's really cheap. I've been watching it. I think it's a good operation, but until that 9% unemployment rate comes down, Kohl's could be a tough story.
They're most sensitive to the jobs market, is what you're saying.
That's right.
Okay.
What about a retailer like Walmart, for example? They're reporting out earnings next week as well. They've had some misses when it comes to sales. Do you have any, what do you expect to hear from the earnings call next week?
Well, we're hoping for a good call. We do have Walmart. It's been a defensive name. It hasn't done all that well. But lately, it's actually been improving its operations. It had a better same-store sales number. It generates great cash, has a good dividend, good valuation. So some hopes for Walmart this quarter.
Well, let's talk about those dollar stores. Warren Buffett's already investing in some of these value-type chains as well. What do you think about the dollar store story? Is it still intact for the future?
It's intact, but it's priced to be intact. They're all around 18 times earnings. It's one of the more pricey sectors of retail, so there's no bargains in terms of valuation there. But it's a bona fide sector.
And David, just quickly, what do you make of, we've had recent economic data that shows that consumer confidence is not that great. And in fact, some have missed estimates. And yet at the same time, we're still getting retail sales that are still pretty strong. So what do you think is happening there?
Well, part of it is pent-up demand. Part of it is that people, on the one hand, give a low confidence, but then the weekend comes and they do shop. There is a certain habit that Americans have in terms of spending. The savings rate was 5%. It dipped down to 3%. That's not a particularly good sign. You will need some income growth to fuel the next phase of retail sales. But right now, people are saying one thing. They see the doom and gloom on, say, business news shows, but then the weekend rolls around and then they they kind of go shopping.
So they may be saying one thing, but then doing something else.
That's what they are doing,
Seems
yeah.
to be what the data is showing. Okay, David, thank you. Great to see you. David Abella from Rochdale Investments, and also to Hitha and Dom.